Good morning, everyone. You're welcome back to Dave FX channel. Today's 31st of December 2020, and we're so excited to see the last day of the year, and the last month of the year. Okay, so for that, we're going to be dishing out those three currency pairs analysis. We're going to be looking at what those three currency pairs are likely to do in 2021, early January, February, March. Looking at the early 21, what those three currency pairs are likely to play out. Right, for Euro GBP, it could take 7 months. For Euro GBP, okay, we don't know how long it take. It depends on the market volatility and all that. But again, we're going to look at what those three currency pairs are likely to do in 2021. Okay, so now this is Euro US 1 month time frame, and currently we're looking at GBPUSD, and my bias on this trade is that this GBPUSD is still going to make its way up. It's still going to have over 700 pips to go on that high. So I think GBPUSD is going to still make its way to this high. Alright, so we're going to still find a bullish move to that high, and it's over 700 pips for GBPUSD, right? So we're going to find this for 1 month time frame. So if you're positioning trader, you can look at this trade and see if it works well for you. And then we're looking at 1 week time frame, the same. It's gonna find its way to that high. That's what I can only see. In fact, I followed this trade since it was somewhere here, and I've always told my students, like I always tell you, it's going this before it got to this zone. This was our first take profit, and now it has made the pullback, and we're expecting it to hit this one, right? So this was the first take profit we had on this trade, and this is the second one we're having now on this trade. So I'm still expecting it to go up to that zone for GBPUSD in 2021. Remember, today is the 31st day in the month of December for 2020. Okay, so now looking at it from the 1 4 hours time frame. Okay, well, still having it doing that. Looking at it from the 1 hour time frame, okay, we're still having it do that. So we're going to have, I think it's be a good entry now for GBPUSD. This is the time is 6:54, right? So it could just make like a small way down, like, and then we're gonna find it up. That's what I can see on this trade. This is totally my bias on GBPUSD, right? So this is what I think. I know that you're wondering why I'm not talking about what I'm seeing and all that. The thing is, sometimes most of my trades, how I take them is, and I analyze the market with a chart, with the structure of the market, and that's the reality. But again, there's something about trading I've come to realize that retail traders are being taught the opposite of what happens in the market. So if 90% of retail traders, if 90% of retail traders, you are having if 90% are having general sentiment, there's a general sentiment in the market about the currency pair, okay, you want to take the opposite direction. You want to take the opposite direction of this. That is number one. That's because the truth is that the sentiment you hear from the retail traders, they are being perpetuated by the professional traders, right? So most sentiment you hear is just for the retail traders to come into the market and take a position, so that way professional traders makes money. So those are one of the things I look out for. But for GBPUSD, of course, like I said earlier, I followed this trade for a long time. I followed it for a very long time, and we've taken profit first on this zone, like I mentioned earlier. We've taken our first profit on this zone, and we're waiting for this pullback. All right, though this time around I missed following it up now, but took it up to this zone from somewhere here. Took it up to this zone here as our first TP. This was our TP1, so this is TP2 now. So this is what I expect this trade to do for 2021 first quarter, or more or less, depending on the volatility and all that. This is my own bias on that. Okay, so let's look at now for intraday traders. Like I said earlier, trading intraday, it's not a bad idea. I know it deals with personality, and I know it's totally you that you just want like the fast trading type of a thing. But again, sometimes you're into a system, or you're into an industry. You need to learn what works in that industry, and learn how to adjust to it. Intraday is nice, but the disadvantage you have in intraday trading is it's the too much manipulations that it comes with. All right, that's what I've come to realize in my few years of being around. It's the manipulations it comes with. Intraday trading is it's actually where the professional traders makes money from, because that's where short-term structures are being created. That's where short-term support resistance are being created. That's where we're having breakout. That's where we're having all those. We don't have that on a higher time frame. We do have that, but for intraday trading, they tend to create things that we'll understand as retail traders, and then they go opposite direction because they want to make money. So that's why most times an intraday trader trades 5 times in a week, makes money once in a week, and loses money 4 times in a week. Now look at it this way. How about you had traded only that once for the week? You wouldn't have lost money 4 times. That's why an intraday trader will analyze the market 4 times. Analyze the market the whole week, trade the whole week, but makes money once in a week. You can analyze the market and have 70% accuracy in the market, but you make money 30% of the time. Why? Because you're trading every day. Now, trading every day doesn't mean that you will make money. It doesn't mean that you're likely to make money because you're trading every day, because you're asking how much can I make in a month, how much can I make in a day, and all that. That's really not the way I see trading. I say trading like you count down to 6 months and say, what was I able to make in the last 6 months? What was my drawdown like? What was my risk reward ratio like? That's how to look at trading for me. Trading wouldn't be most times about how much did I make today, how much am I going to make in 1 month time. This ideologies have been inculcated into us by bodies that has conflict of interest. Bodies that has conflict of interest with the retail traders. They've told us that this is the way this thing works. You have to come and trade intraday, scalp and all that. This doesn't mean that this doesn't work. It works, but sometimes we tend to overtrade. Let me just put it that way. We tend to overtrade, and overtrading is one thing that can blow up your account even before you start. All right, so and overtrading comes with you cannot be a swing trader and overtrade, because of course you're going to be riding one trade for 2-3 weeks in 1 month. Okay, but if you're a scalper, you're going to have like 150 10 positions in a day or in 2 days. Now this doesn't mean that you will make money, that you're over trading or you're trading every day. Doesn't mean that you're going to make money in the forex market. It only means that you have a high tendency of losing money because of the instability in the forex market, right? Because of the manipulations and the fake outs and all that. That you maybe it's not like you're not right. You're actually right on your analysis, but again, you're being taken out 90% of the time because you're over trading. Right? So how about you trade 4 times a week, right? You're trading 4 times a week, and you made money only twice. How about it was only that twice that you took trade for the week, and you made money for the week? You see, that's the disadvantage of trying to trade every day and trying to follow the notion that if somebody comes somewhere and tells you I make $100 every day, okay, if you make $500 on a trade you entered since Monday, and on Friday you came out and you made $500, what did you make? You made $500 every day. But again, you did not trade every day. So just see it that way. I think trading is is about what you make on the long run and not what you make on a short term, right? So that's for what I'm seeing on 1 hour time frame. So if you're trading on 15 minutes time frame, let's say if we have an entry here, sure, we do have an entry here, but I would advise that we'll wait and see something like this. Let us trade. It might not do it, it might do it, before it goes up. It can do that, but again, it can just continue going up from there. It can pull back deep, retrace. But again, the important thing is that this is the direction it's going up. So it's going up, and this is what the direction I can see on the chart for this currency pair. All right, so let's look at EURUSD. All right, like I said earlier, if you notice that EURUSD and GBPUSD, they always have the same direction they are trying to accomplish almost at the same time. Now, this is what I think again on this pair. Right, I know that I know at this point that this market is on a support level. Of course, here that has become a resistance somewhere here, right? So UT traders wants to sell at the zone, and I know that the market is making a higher high, but this is making a lower low, right? And we're expecting the market to go down from here. But I'll show you something. The see, when it comes to trading with this RSI and the support resistance and all that, you see why I think we've been taught the opposite of what the thing does. That's what I think, and that's what I've monitored over the years. I think this is being taught exactly the opposite of how it works. Okay, look at this. Look at it this way. This is on the zone now, and is here now, right? And we're saying it's going to get to this zone. Now it's here. It means from this zone it is now in 1 month time frame. From this zone it is at the zone. It's and to from the where it is now to where we're expecting it to get to is like how many pips? 241 pips or 240 pips. Alright, so if we're expecting the market to go 240 pips from this current market price to this zone, 240 pips. Now this is for one. You look at this, you think it's gonna go down because there's a possible divergence here, and that's market is making a higher high. If that's what you thought as divergence, I really question everything I've been taught free. That's my person. If I've been taught, well, when I was starting up, I've been taught by a broker, right? I've also worked with a broker in my career, in my time of trading. I've worked with a broker, a very strong regulated broker at that. But when I was starting up Forex trading, I was part of the people that was being taught by a broker. But I question everything. What knowledge I will get free that can make me millions of dollars. I really question that. So it made me make so many research, made me got so close to my chart that I have to start spotting some things by myself, right? So now these are one of the things I've realized, and I'm going to share it with you. Okay, something that we'll teach in our academy. Something that I'll teach in our academy is one of it. So you're going to learn that now. Okay, just pay attention to it. You see, from here to here. You see, that's an overbought here above 70. Overbought above 70, right? You see that? Now, this is a support zone, and at the support zone, we're expecting the market to sell. So at this zone, as this particular current market price, it's a trade that wants to sell. Like I said on GBPUSD, we've seen this trade from here. I'm not just talking about, I will follow this trade for a long time. Right, so this is going to shoot to this zone, that's what I can see, and this is going to make an overbought, something like this on this. That's what I can see on this trade, clearly see on this trade. That's my bias on that. So looking at it from the 1 week time frame, it's still going to do the same thing. So I know it's an overbought zone, but I don't advise it sell because it's still a space up, and I know it's in 1 day time frame, so the same thing. I know it's an overbought zone, but there's still a space up. Let me show you the space up. Look at this, the current market price. Show you one secret I use to trade this the way it was being taught. The current market price is here. The current market price is here, right? It's here. This is the current market price, of course, the buy and the sell, but this is below 70. If you look at this previous high, and this was the previous high, all right? Because the RSI makes the same move with this. I'm just trying to treat the RSI for you now. You look at this and this, you see that this was in the same zone. If you look at the current market price, this current market price is higher than this high here, right? It's a higher high, but this is a lower low. Now what this is doing, this current RSI and the current market prices, this one is higher, this one is lower. So when this shoots up, this goes up, right? So you can't depend on overbought and oversold. So I will make this, I'll take our time and teach extensively on this RSI and how to trade it both on the higher time frame and the lower time frame. But these are just giving you the tip of the iceberg when it comes to trading that, so you don't base your analysis on overbought and oversold. I'll take our time and make a video for that. So you go ahead and subscribe, so that when subscribing videos comes up, you're going to be part of the analysis, and you're going to see what we are seeing on DEFCON FX, right? So you're going to see what we're seeing here, right? So this is for 1 day time frame. Let's look at it from the fast time frame. The same, you see the same. Let's see, this shoots up, so you're going to have the market continue making its way up. We're going to have this shoot up. So okay, not to that soon, sorry, not up to that. Of course it might, nothing is impossible in the forex market, it might. Okay, so again, like that. So you don't expect a divergence because it's making it lower low and then it's going down. No, it's going up. That's what I can see here. See, that's what we've been taught, opposite of what the market is likely to do. So this is for this. Then for, we look at the 1 hour time frame, the same, it has a space down, and then so we can just expect the market to shoot up. This is what I can totally see on this trade. Okay, that's why I use that there. So I'm not trading at red side, don't misquote me. I'm not trading at red side. I will teach this differently. I'll teach this differently. I'll teach this differently on a different video. I'll teach this differently. I trade structure. I trade totally structure. I don't trade a red side, but I use a red side for the opposite of what retail traders have been taught. So that's why I've come to learn the act a lot small. So that's why I'm doing that. Okay, so sorry. Now let's look at EURGBP. Let's look at EURGBP and look at what it's likely to do. EURGBP, look at what it's likely to do in a short time and long time. Let's look at 1 month time frame. Like my tradition is 1 month time frame. Looking at 1 month time frame, we found EURGBP being on a strong level. Being on a strong level, you look at the strong level, right? it's already on a resistance, right? Now, and it's been here since 2015. It's been on this zone since 2015. So are we supposed to sell on resistance? Yes, we are, but let's look at it this way. Remember, I don't trade support resistance, but again, I use it for my own advantage. Of course, I don't buy a support and sell a resistance. That's as we are being taught. I do a very different thing. I trade total structure, and that's what I trade. Okay, so looking at that now, for me, I think I can see one thing on this trade. It's true, this market is in resistance, right? Is it right? Is 1 month time frame. You won't always wonder why I come to 1 month analyze when you're looking for how to make money today and all that. Can I go to 15 minutes? Like I said earlier, it's not about that, right? It's not about that. I can go 15 minutes and then we'll start finding so many errors there. So we need to come from the bigger picture. Okay, so, and of course, this is where the money is. This is where the smart money is. So you want to stay where they are if you want to make money. All right, so not because you're going to trade on 1 month time frame. We're going to come from here to be able to understand the total and the large structure in the market. Okay, at this zone, something I can see on this zone and I'd like to share with you. You see, this is a strong key level. This is a strong key level, and I understand that. Okay, so the market is going to, I think there's still a way up for EURGBP. I think there's still a way up for EURGBP, meaning we can find EURGBP still make some move to the high to complete this high before it finally goes down. It could come like a stop hunt. It could come like a stop hunt to this high before it finally goes down, right? It might not even get to that high properly, but I think there's still going to be some kind of manipulations around there, some kind of play around that this zone before it finally makes its way down. But on a longer and longer look, after the whole stop hunt and all that, and after the whole manipulations on that zone, this is what EURGBP it's gonna do for that. So for this, I think somewhere here is going to spike to this high or above it. Then it's gonna sell. Is what I think for this 1 week time frame. Let's look at back to 1 month. After all this manipulations there, after the manipulations here, we're going to find after the manipulation, we're going to find it. If it's a bit up here, then down. So if EURGBP starts making a spike to the high, it's more, I will feel more comfortable taking it for a long time. If it starts spiking to the high, if it starts making its way to the high, I think I feel more comfortable taking it down to the low than this current market price, right? So now the way to take this trade for swinging or positioning this trade is to take this trade on if you're trying to take depending on your account size. If you have probably, let's say you have $1 million in your account size and you want to use, say, 5.0 lot size, depending on your risk appetite, it can be higher, it can be lesser. It doesn't matter how much you have, it's just your risk appetite. Okay, so depending on your risk appetite, you want to use 5.0 lot size on this trade to swing it to the low, all right, or to position it to the low. If you want to do that, you can divide your risk to 2.0 lots here and 3.0 lots here, and this you're still on your risk appetite. So why? Because you're gonna have more of a higher stop loss to this zone to this. So because from here to here you're gonna have a stop loss, so here wants to be lower than this so that the risk will be lesser. So you have 3.0 here, and you're having a stop loss and above here, there, and all that. So you're going to take it down if you're positioning the trade. But I think it's not very much ready yet to go down, so I still expect some kind of spike above for me to take up the trade. It could be spike to this place, it could be start to here, it could be just here. So any spike above there, I'll be more comfortable taking if positioning the trade or swinging the trade. For a position trader that is watching that, you can look at that too. Alright, so this is for Euro GBP in 1 month time frame. Let's look at it from the 1 week time frame. The same we're expecting on this. Probably we're going to have this move down from here. If it doesn't go down from here, let's look at that. If it doesn't go down from here, spike to that zone, and then before it goes down. So this is for 1 week time frame. Let's look at it in 15 minutes time frame. I know a lot of traders like this one. Okay, 15 minutes time frame, which is a good one. Let's see. Okay, so you could break the low that it's currently on. Screen right. Yes, it should break the zone that it's currently on. That's what I think on this 15 minutes time frame before we now find it going up. This is what I think on that one. Okay, so just 1 hour. Okay, in 1 hour time frame too, I think it's coming down to the zone. Okay, so this is my bias on those 3 currency pairs. Now, like I said earlier, trading the currency market is simple. Traders makes it very difficult. How is it simple? Now, a market that tells you I can use you know the certain level of risk exposure before you even enter the trade. I think such market it's peaceful. If the market tells you if you put on 0.02 on a $1,000 account size, you're going to make as a risk at a stop loss, you're going to lose, depending on your stop loss size, you're going to lose 30 pips. If the market tells you that you're going to lose 30 pips, if you do that, if you use 30 pips stop loss, you're going to, with a 0.01, you're going to lose $3 on this trade. Then I think it's a very good one. Now, but what if you wanted to use 1.0 lot size on a $1,000 account size? See what you're doing to yourself? You're making it difficult for yourself. Because that's why I say Forex market is very simple, but traders makes it difficult. Now, I know you're going to say, how much can I make using this 0.01? When will I now make the money? It's simple. If you want to make money in the Forex market, increase your equity on a good risk management too. So it's all up to you. It's really all up to you. If you have an account size that can carry a drawdown, then and you're entering a trade on a high risk, you see, you're the one putting yourself on emotional trauma. So the thing is, if you have a large risk appetite and you want to practice on a $1,000 account size, you can even blow it up before it starts. Not because you can't make money. I'm only looking at the risk part. You see, I love looking at the risk part before the profit I've not seen. The aim thing is I'm able to preserve the money I came to the market with. My ability to secure my own equity. That's what I'm after, right? So every other thing is secondary. Profit is secondary for me. So the ability to preserve the profit I came to the market with is primary for me. So you want to look at the market that way. You're not looking, I know that most of us have been told so many things about the forex market, how you can come here and buy Lamborghini, how you can come here and buy Venza 2021. You've told all those things, but again, it's really not the reality. The reality is the forex market must be traded with the rules, and the rules are: number one, patience; number two, the risk reward ratio. Always have that at the back of your mind. Your risk reward ratio is very important for you to make money, right? So those are the few things that have to be put into account, not all of them. Okay, mentorship of course is part of it, so that's why we mentor you at DEFCON FX. We mentor you real time, and we will teach you what the professional traders had refused to bring up to us as the traders. They've always tried to teach us the opposite of that. So that's what we basically do on DEFCON FX. We mentor you real time to have the full and the balanced knowledge about the industry. Like I said earlier, I've worked with a brokerage firm, okay, a very well regulated brokerage firm, but something happened to them and they are all down now. Okay, so I've worked with a brokerage firm. We're going to give you a balanced knowledge about the industry, right? From the brokerage angle, from the professional angle, from the retail trader angle. We're going to give you a balanced knowledge on in DEFCON FX. So you encourage you to subscribe, right? Hit the bell button, subscribe, and thumbs up, of course, so that when the next video comes out, we're going to still be looking at other analysis at the first quarter or the next month, other analysis for other currency pairs, and we're going to be dropping a follow-up on this. On those three currency pairs that are listed at high, we're going to dropping a follow-up on them. So you want to always get the notification, so you just subscribe to this, and then we'll do more of this. Thank you very much for tuning up to date. Thank you. We really do appreciate that.